A very good morning to everyone and a warm welcome for the 15th edition of Digital Money organized by Payments Council of India. Yes, you heard it right, 15th edition, long running of success at PCI Flagships Conference. I'm your host Rennie and I'm pleased to have you all present here today for the 15th edition of Digital Money presented by PCI and Lyra Network India. Before we kickstart the show, let me now introduce you to Payment Council of India (PCI), who is a representative over 85% of non-banking companies in the payments ecosystem and was formed to effectively cater to the needs of the digital payment of the industry. To know more about PCI, you can reach out to the PCI desk here and at the venue or ask the organizing committee members around to share more information. This edition is with the theme From Information to Synergies, embodies the forward looking nature of the digital payment ecosystem. This theme highlights the importance of innovation in driving growth and expansion, as well as the need for collaboration and cooperation to realize the full potential of digital payments. I would like to thank our title partner Lyra Network India, powered by Razorpay, our gold partner Visa and Amazon Pay, silver partner PayPal, FindiPay, In Solutions Global, Transcorp and Paypoint, bronze partner Plural by Pine Labs. To begin with, I would like to call Anu Tiwari, Cyril Amarchand Mangalans to moderate the session with Ashutosh Naik Grow, Dipesh Koki, Lendon Club, Mehul Mistry Wibmo, a PayU company, and Sheetal Kapoor, Amazon Pay, as our panelists to have the discussion about the very trending topic, the future of fintech regulation in India. Over to you, Mr. Tiwari.
Thank you so much. Never easy doing a Monday morning first session on fintech with such a diverse panel. But let me promise you, just given the names we have managed to collect, including flying down from various cities, this promises to be a cracker of a session. So do we need a round of introduction so we can? I think they so let's do a deep dive straight away into the topic. And I think the assumption is everybody knows what fintech is and all the various constituents of fintech, because the panel we have actually represents each vertical, and that too just a small set of the vertical called fintech. So let me start with the Sheetal first. Just given where you sit in the ecosystem, you get to see it differently compared to the other participants. Are you seeing a bit of a globalization of regulations? Because there was this very interesting forward I saw over the weekend that the battle is between China and US, and Europe is framing regulations. I mean, they are proactive with regulations, not really the innovation. I mean, just quoting what I saw, not commenting on it. And a lot of the regulations, at least one is seeing getting imported to India. So how would you see the landscape in terms of globalization of regulations, especially in the last year or so, and of course, going forward, keeping in mind bigger themes? We talk about fintech, but there is a Digital India Act under play, data protection bill, you have platform guidelines, you have gaming rules. So all the dots and lines are really getting connected. So what do you?
These are my personal views and not views of my organization. From a globalization perspective, I wouldn't get the politics and the political part into it. But yes, you do see certain themes like data protection going across, including India. It is having that alignment within different, and bringing in those learnings and having those alignments within the different regions and countries can be actually a great thing, because we can have consistency. So while there is the EU that already has the GDPR in place, and then India coming up with ours, and maybe other regions that you've mentioned, it's actually, I think it's a positive move if we're all going in the same direction, but we should all be learning from each other while we're creating that globalization. How globalization can help a region, I would like to believe Amazon Pay India is an Indian country and we're here to do business in India. So we'd love to work with the Indian industry partners, regulators to create the perfect experience for our customers in India within this globalized environment.
Very perfectly tempered opening remarks. With that, let me ask Mehul, because you also, where you sit has a strong India connect, but also a global connect, given, the owners and the vision. Do you feel at times, okay, personally what I felt is that the lawmaking in our space in India probably has been the most mature. Because when we talk about a regulatory sandbox, I think the sandbox regulators have is let an ecosystem evolve to a level. Only when it starts to create, quote unquote, a systemic risk, then step in. Digital lending is a classic example. Payments, again, a great example. There was really no hard law. So many consultation papers on various topics. I think P2P, that's again a great topic because it was starting out and then a need was felt. Bad actors. Regulators only worry about customer protection, bad actors, AML. But do you feel at times, because personally I've seen maybe are we over-regulating? Because in the last few years, what one sees is there is too much of a fine print regulation as opposed to a principle-based regulation.
Yeah, so I don't think so. In India, we are over-regulating, frankly. I think, we have a very forward-looking regulating system in India. And what has happened is, so far, whether you look at lending, whether you look at investment, or whether you look at payments, okay, we, over last 2 years or so, we've seen different kind of guidelines coming in, whether it is to do with PPI interoperability, basically guidelines to support payment aggregation, okay, whether it is credit on UPI or digital lending. And if you actually see, this guideline was very much required to ensure that we have a very stable financial systems in India. So I think it's a very forward-looking system, and I don't think so we are over-regulating.
Yeah, in fact, completely aligned. The only little struggle one sees, and this then over to you, Dipesh, because somebody who is looking at a P2P lending ecosystem, one often hears arguments that why do we hardwire limits, right? Because when a limit in any regulation, forget an act of parliament, gets hardwired, I think PPI is a classic example. It remained 1 lakh, then payment banks came 1 lakh. Only September of 21, with the new guidelines coming, it became 2 lakh. So do you feel that is something which can be revisited, and also from a niche licensing standpoint, because it also then can bucket you in a certain, for example, it's an exclusive license. You cannot do anything from a P2P NBFC, only like account aggregator. So any thoughts on that?
Thank you for the question. So, Anu, see, the thing is, we often see regulation as constraints, but if we look at it deeper, right, it gives you a direction on how you should be operating. I mean, in India, looking at Lending Club itself, when we started in 2015, educating people about what peer-to-peer lending itself was a challenge. With at least guidelines coming into place, we can proudly say that we are regulated by the RBI, and we are a RBI recognized entity coming to you to offer proper options with for loans, for investments, right? So that's more of a benefit rather than a constraint. Coming to the question on limit, I believe, I mean, even if RBI, let's say, says, or any regulator says that, hey, you're allowed to take any kind of investments, I don't think anybody would come right away saying, hey, take all my money and start investing, right? It takes a lot of time to build product. It takes a lot of time to build confidence in that product among the customer sets, right? So I think the initial limit of 10 lakh rupees was quite decent enough to build that trust among the Indian customer sets, and which was quite thoroughly evaluated by the regulators. And based on the performance of the top 4-5 peer-to-peer lending platforms, they even extended the limit later on to 50 lakhs rupees, which as of now is doing a decent job of capturing the market. With this kind of regulation in place, I mean, India, the peer-to-peer lending business in India itself is projected to be about $10 billion, right, by 2025. So I believe, and in fact, I'm sure with these kind of constraints or these kind of regulations, we'll be able to cross that benchmark much before. So I see it. I'm forward looking towards it.
That's a great segue into the next theme, and let me start with Ashutosh ji. There are two schools of thought. One is whenever you get licensed, you become a commodity product. because everybody has to operate. I think P2P lending, everybody can read the regulations, know what to do, and then you only play either through velocity, good execution, or through scale. Right? There is no other. I mean, innovation gets bracketed.
I wouldn't say that. There are
There's one
innovations
school
possible.
of thought. But the increasing school of thought, and especially in the global tech sector, one is seeing players want to be licensed because it's also a moat of a different kind, than other than payment aggregator. It's a classic example. You see the players who have gotten in principle, whose applications have been returned, including the fresh players who applied. At least now one knows who to deal with, as opposed to a 1 lakh paid up capital private company who claims to do the business. So Ashutosh ji, in this context, what would you think? Is it better? So one is the whole commodity argument, the moment asset management. Again, let's start with that, because it's a fairly prescriptive space, and especially wealth tech, which is a new arm of fintech which is evolving. Do you feel, and we don't really have wealth tech regulations. Finfluencer is a new theme which SEBI has been looking at very closely. But unlike RBI, do you feel it should be left alone? Also, US equities. It's a great new model which is coming up in the wealth tech, fintech side. So any thoughts on leave me alone or license me?
Those, I think the idea is from all fintech is to democratize, to bring people to a platform. Actually, that's what we look forward to. And we have all seen on the fintech side, it really requires lots of investment, lots on the people side, resource side. People want clarity, not for short term, but for long term. What can be my business model be? What can I do? What type of people I can onboard, and what should be my product mix should be. So that's something which, one thing which we have almost in my journey with this organization of the fintech, regulators are very eager to hear you, and when you give a fintech angle to any of the requirements, they are really more to hear you. Because that's something which is the theme of India, as to promote fintech. That's why we think that interaction with the regulators helped us to think long term, build our products on that. I think when we say regulators, are we overthinking on the regulatory aspects? Are regulators trying to do any micromanagement? But that's something we are also going to regulators to on the clarification side, understanding some things to be clear, right? To when you make your investments, that's something which we think is something very pro. We have at least felt on all the products what we have launched. On the wealth tech side is also that if you say US securities or any other global product or gift city is something where I would feel that's again an India theme, how you play with, how do you demonstrate, that's finally it's in the interest of our investors and Indian economy. And yeah, we have forums at the ministry level or the regulatory level. It can be a sector regulator like RBI or SEBI. They're quite open to hear your ideas.
No, fair point. With that, let me just take the conversation to a notch macro about regulatory partnerships, something we have been discussing as part of our preparatory calls. One common observation one gets is that of course you are heard, but you are heard and ignored. I'm just setting out what one hears. Or I'm not heard with the same way, say, the topmost licensed player is heard by the regulator. And thirdly, when I try and break into the, for example, if somebody wants to buy a bank or wants to buy an asset management mutual fund, the lead time to it tends to be very different compared to what strategic to strategic transaction. And this is also market entry. You enter either applying, which is licensing, or change in control, M&A. So let me go around the panel and hear each one of you, and also what do you feel can be done more to ensure there's a closer partnership between the evolving players, which is not the Mint Street, not the East Coast more an anti-Wall Street players, and the regulators, and also conscious. There is no one regulator in our space. When we talk about a regulator, you have central bank as a regulator. You have many regulators. You right now don't have a regulator, but are dealing with regulatory players of a certain type, PAs. You have SEBI as a regulator. Tomorrow you want to get into insurance broking, you have IRDA. Pension, data protection, a new regulator. I won't even get into antitrust. It's a different area altogether as a regulator. So who's my regulator itself is increasingly, something any compliance, legal, corp dev, CFO has to keep in mind. So let me start with you.
No, surely. So, yeah, I agree that from a strategic side, when you think about particular investment or starting a product, there are lots of licenses or of change of control applications which run through your regulators. I would really think is that, first of all, I think it's too much of work also regulators have. Why we need to accept that practice or understanding, and at least from a security side, it a little seasoned, right? We had 50 years of history of broking, 92, so around 35 years of asset management business. That's a little structured way of doing this. But the new products which regulators also try to understand who the investor can be, who can the sponsor be, who are the investors coming in a new product, which regulators also learning. That's a little challenge we find it out. But I think standardizations are happening at the regulatory level. Regulatory interactions are definitely happening. And we should, I think it should be streamlined in a short period of time.
At least the space in which we operate, okay, which is the payments infrastructure play, okay, we work very closely with regulated entities, whether it is banks or fintechs. Okay, what I have personally seen is that there are basically either there is a regulation already in place, or there are regulatory body who's already working on creating some kind of a regulation. Okay, so let's say if it is payments, okay, then all this while there were many players who were operating as a payment aggregators, okay, unregulated, but we all have seen the new regulations which have come in play, and for obvious reasons. Okay, separately on PPI, right, there was regulation, but then there was always a need in the market that PPI wanted to operate very similar to banks, okay, or let me put across saying very similar to payments bank, and now they have access to, let's say, an IMPS and then card rails as well as UPI and stuff like that, right? And they also will get interchange which is higher than what is going to get offered to banks. So I'm sure there are few people who basically putting across and talking to regulators and basically ensuring that their say has been heard, because we all know that interchange on PPI is about 1.1%, which is much more than what it is on debit card, right? This is one. Apart from this, just to ensure that on the credit side, okay, there are about 85 million credit cards in the market, and what is happening is there was a need to increase this from 85 million to, let's say, whatever, 200 million. I think if one had to ride on the standard credit card rail, it would have been difficult. So I think some of the fintechs and banks, they came together and they tried to open up something called as UPI on credit. I think that's a very positive move, and and it could change the way the lending can happen, Correct. So yeah, these are my views.
Just when we say that the regulator is not listening or is listening, I think it's more of, are we explaining in the right way as well? What happens is that regulation comes back, we do a backlash saying, nahi, ye to nahi hoega, ye hamari innovation ko, this is going to be a hindrance to our innovation. But are we providing solutions? Are we saying, hey, let's think in another way? We just say, okay, RBI, we think this is not working. And I think that is the biggest challenge after I've analyzed a few sample examples. One great example is no-card storage and COFT itself, right? We all pushed back saying this is not a viable model, this is not going to work for any of us. But eventually, if you look at data, which we couldn't provide at that point in time, data and statistics prove that tokenized transactions have equivalent success rate or even more. So I think it is about working with the regulator and creating, and something that we discussed during our prep calls as well, is having workshops in place for us to see within the regulation how we can innovate. I do agree that there cannot be one size fit all approach for regulations, but it is for us to work with the regulator and educate the regulator on the different models in the industry for them to think beyond that one size fit all model. What do we want as fintech companies, and what does the regulator want? It's eventually the customer, right? We are looking at providing a trusted, secure, as well as seamless experience for the customer. They're also looking at security for the customer. So I think collaboration over there is very critical. And working with them to create innovative models where there isn't a simple, hey, and what happens at times, just to add in, is that one player may do something a bit wrong, and then eventually it's taken up as we need to make this regulation to cover all, but in which that one size fit all again doesn't work. So I think it's all about creating those workshops, not about us only providing consultation. Let's be more proactive as an industry as well, working with RBI. Like Ashutosh rightly said, they are willing to hear us, they're willing to work with us. But we need to also be willing to work towards solutions and not just providing consultations on what is working and what is not working.
Just to follow up, you raised some very interesting points. Do you think SRO model is better suited for an evolving sector like ours?
For example, OTT, which has been at a nascent
Why
stage.
I asked is, bad apple problem, then legislating for the exception. If the tribe itself can outcast the bad actor, you don't need the king to come in.
I absolutely agree with you, and I think I was talking to Gaurav Singhal somewhere that RBI is looking towards that direction as well, and I think that's where the workshop part and self-regulation part kind of goes hand in hand. Today, if we are willing to work within our own, and I'm talking about not the regulated environment, there's multiple businesses and we keep innovating different models that fall beyond the regulation. But if we have a self-regulatory body in place that helps put us in check, and we have those check marks, it gives RBI more self-confidence in us going in the right direction as well. So I mean, something, and before Amazon Pay, I was with Netflix, and I think a self-regulatory body over there has really helped streamline the processes and build trust for those OTT players with the regulator and with MIB. And I think it is something that it needs to be tested and tried. I can't say it'll work or not work, but I believe it is something we should test and try and work as an industry to create boundaries around us that RBI does not have to get to the micromanaging like you mentioned.
Actually, Dipesh, before I come to you, because this is a very interesting point, and the only person sitting here who actually has lived and will live through a licensed SRO, Amphi, in the SEBI world.
Yeah, so Amphi is still not an SRO, but yeah, it has played an important role as representing an industry rather than representing a particular organization. Because some organization may have its own agenda to run a story with the regulator, right? But when an SRO meets, it's something regulator is happy to hear it. Lots of communication with regulator wants to communicate to the members or the licensed entity is to that SRO. That's something which we really, the best practice guidelines, as we say, the SRO cannot have a regulation, but the best practice guidelines, it's very, very strictly followed at the asset management business. That's something which I see at NPCI level. That's something on the, if you see the PSP licenses or TPAP licenses which are coming, even the understanding on the TSPs, third-party service providers, how they are trying to help that eco-culture of a payment industry, I would say. That's something which is beautifully managed, and we should look forward towards it.
Sorry, Dipesh.
Yeah, so coming back to the original question about working with the regulators, I believe that's something that's already happening, right, at a great level, at least with regards to peer-to-peer lending or in general lending. I can tell that, we work closely with the regulators. See, the difference with between the regulators and the fintech innovators, in the purview of that regulation is that the entities out there tend to innovate within the regulations, right? They tend to come up with new ideas, and the regulators are the one that define the playground. Whenever you go off the field, they tell you, hey, this is the boundary through which you have to play in, right? So that's happening on and off. We keep on meeting the regulators periodically. They ask a lot of questions with a lot of curiosity on how this model works, how this is happening. They do get a detailed, of course, do a detailed analysis of whenever things may go a bit alarming, or if there are any chances of diverting from the original agenda. Just adding to what Shital said some time ago, right? In case you're not informed about what happened or how did a new regulation come in, right, without your consultation, the chances are you are the bad guy, right? Otherwise, regulators will always keep you informed.
Great point, which is why I think, and I'm conscious we have a few minutes left, I'll come to the last question. One feels it's always better. There's this very famous Yes Prime Minister episode where Humphrey or the bureaucrat tells the minister, I'm just quoting, so without passing judgments, that London has always been a part of Europe and broken it as opposed to sit outside and suffer it. In the context of EU, some trade talks. So not to give the intent, but good to have a seat at the table and to know what the thinking is, then to be a taker of regulation. With that, just some closing remarks for the entire panelists. If you were sitting here 3 years from today, wish list, where do you want, if you could visualize the ecosystem, right, as a whole and also for each one of your verticals, how do you see the ecosystem evolving? What would your wish list be?
Wow, that's a nice question. I think
This is off the syllabus.
No, that's all right. See, I think the way we project Indian fintech ecosystem to be growing, right, by 2025, it's expected to reach 1.3 trillion, right? I think that will not happen with just the way we are, swinging here and there today, right? There'll be so many questions, maybe with Mehul or, the amazing thing that Ashutosh also shared about Grow itself today, right? And even at Amazon, right? They're doing amazing stuff with Amazon Pay. So I see that there'll be a lot of collaboration happening in the near future. We touched upon a point yesterday called Unified Fintech License, right?
Digital banking license.
Right. So it may come as a a ready-made suite or a gamut, or it may be in the shadow, wherein serving the same purpose, wherein there'll be multiple players coming in to make sure that, see, ultimate aim of any fintech innovator or any regulator is to make sure that you're financially including every part of the country, right? So I'm sure a lot of innovation will require you to bank upon another innovator's idea and to make sure that you're delivering your financial service to them, making sure that you're educating them well about what your service is doing and how it benefits, garners a new benefit or a service or a business to that individual. So I think my first wish list would be to allow more and more partnership, right? Defining the boundaries, of course, if in case there is any violations in terms of regulatory needs. Second wish list could be maybe accelerating further on the digital banking, because India has penetrated amazingly in terms of internet, right? Wherein about almost 50% is as per the report by Nielsen. Almost 50% of the Indian population is already using internet, right? I mean, the data showed that about 10.1 billion. No, not 10. I think it's 1.1. My bad. 1.1 billion, unique mobile phones are being, SIM cards are being distributed out there. So I'm sure there is a lot of redundancy out there. So aggregating this and linking all the mobile numbers with different kind of identification is something that I expect further to make sure that we onboard customers more easily. The KYC part of it is smoothened further.
Great. Sheetal?
Just want to make a comment on the full license. I think we should deep dive into why the payments license wasn't a success for everyone, but for a minimum amount of people, because that is what RBI tried to do with a few of their regulations, to combine it in one license. So for us to reach that level, I think it's again working with them on the balance of regulations and where monetization can come in. So while we are way ahead in the industry when it comes to a lot of payment products, be it digital lending or be it UPI itself, but I think it's that monetization aspect that we need to work with them on to ensure success stories. And somewhere with the regulations and lack of monetization, maybe on the payments bank side, it wasn't that much of a success story, but that is kind of the direction they were planning to go in when you talk about a digital banking license. So it'll be great for us to, again, have a workshop on seeing what is that best license. The question you asked about wish list, I think wish list eventually, what I have today, because Dil Mange More always will be the same 5 years ago, which is, how do I provide the best payment experience to my customers? And how do I partner with individuals in the market? How do I partner with the regulator to ensure that? That kind of covers the KYC part, that covers overall the limits part, that covers monetization part, that also covers the regulatory part. So I think I'm a firm believer that yes, we need to be regulated in order for us to be consistent. But at the same time, we need to be looking at how we innovate within that to not damage the customer experience. So I think my wish list today is the same and would be 4 years to best provide the best service to my customer and work with various partners to do that.
Great. Mehul?
The way I think is, one is about regulation and the second one is about creating the right framework. Okay, so I don't think so regulating everything, okay, in the sense, let's say digital lending was one which was obviously required. But having said that, within UPI, right, all the banks, they got access to UPI, and then there was framework which was created. That framework allowed UPI to grow, which is the TPAP framework, right? And that was not something which was regulated by RBI. It was regulated by an entity who was basically had created the framework, right, which is NPCI. So what I feel is in next 3 to 5 years, the right framework will allow this entire fintech industry to grow. Regulation needs to come in for some things where definitely a regulation is required. So for example, let's say digital lending was one example, right? They had to basically get into to create a right regulation. But apart from this, okay, the right framework will help this industry to grow. And I think that is what I would be looking out for.
So I would say, actually, while we have licenses, SEBI, RBI, IRDA, why does a fintech require a license? That's something which as a biggest wish list I have. We have seen Anu together, right? From a AMC side, they allowed fintechs to be sponsors. Today, at the credit rating agencies, fintechs have an access to the data subject to meet some criteria. That's something which is a big wish list, because that's something, as I always say, that the great minds, the great investments is happening on the fintech side, and that's something which India is been known as internationally. So most trend to fintech companies on various access to market intermediaries, market data, and I would say, I think customers are the same, right? As we said, for the payments or for UPI, the same. That's something I think a public policy division or council forums is something which helps regulators to come out with common standards, right? You not think that for this same customer onboarding, I think to see SEBI regulations, same customer onboarding, maybe UPI is different, same customer onboarding maybe RBI. That's something which is the biggest wish list of not me, of the various participants of this industry who are involved in this, creating that democratic to reach lots and crores of Indians. That's what we all look forward to.
And as a fifth panelist and not speaking as a moderator, my wish list would be to see more exits, not just license deals where somebody is warehoused, because good exits, I feel, in fintech sector have been few and far between. Also because of change in control, deal timelines are longer. One has to go to regulators, fit and proper, which means you cannot have VC funds. You need big bulge names, so it's not like everybody can buy. Change in control is seen as a new licensing. The Form A example, for example, right? And good exits means people are monetizing, making money, which is what the whole.
You only innovate if you have money, right? You don't have money to innovate, you can't innovate.
Exactly. If one were to see the fintech wave in, say, Korea, Brazil, US, people want to do something when they see a Kapil Dev lifting a World Cup, which means good exits. We see them in US, we see good listings, but I would want to see the ESOP story play out. The way wealth creation has happened in the valley, for example, in our space in the last 8-10 years. One is hoping for it, but our cycles are too SME, in terms of aspirations. So on that note, that's it from us. Any questions from the audience?
Thank you. This is very pleasing to see all of you together. I come from a company called TSS Consultancy. We are a RegTech solution provider, that is regulatory technology. So we provide CKYC, AML, and all of the solutions for 350 plus customers in the BFSI sector. So one thing we have experienced, that is most of the financial institution wants to do compliance just out of the fear of the regulator. Not everyone, there are exceptions. So my question here is, compliance is something that is meant for our own improvement to, check ourselves and our clients, or is it something done out of fear of the regulator? And if regulator is out of the picture, then no one is bothered to do that. Is it so, or there is a bigger picture to it?
Sheetal, while you can answer, just one on the humorous side, business those. In my previous organization, this is more coming from anti-money laundering laws, right? Yes. So I said to my boss that we need to have the standards of anti-money laundering systems. Let the money come, then become anti-money. So that's where it starts, right? Yeah, sorry.
Just to add to that, being a lawyer, a tactic that I've used with my business, and I would say it is a foundation of our business to have KYC and anti-money laundering procedures in place. You can innovate like tools like yours to help us expedite our experience and our merchant onboarding or our customer onboarding for that matter. Sometimes from a business perspective, think from their perspective. Like he rightly said, you need to first build a successful business before you think about it. So it's also our jobs as, and I'm talking on behalf of legal individuals, to make them understand why this is good for their business. Why is it good for, how is it going to help them create a larger business or a strong foundation for their business. So I'm one of those firm believers of not really calling this compliance or being feared from law, but actually making it a part of SOPs, and that's what I did with one of my earlier organizations that I was with, where simply it became a part of different operating processes that different teams had to follow. Without really deep diving, if anyone really wanted to understand where the regulations are coming from or why they're doing this, we can deep dive into that. But technically, this is a part of your business plan. And you need to do this for the growth of your business, is how I have been selling this to my business counterparts.
I'll just add one more perspective to this. See, compliance makes things Boolean, right? Whether you do it or you don't do it, right? It's black and white. Anything between black and white is a wide spectrum of gray, right? You don't know where you will play or what role you're going to play. For example, let's say in terms of KYC, if you were not clear about how to do the KYC, trust me, your organization would be stuck in the hassle of just managing the KYC, because there'll be one person bringing in this perspective saying, hey, let's do it like this. There'll be another person saying, hey, let's do it like that, right? Your organization will not be able to deliver the ultimate business value if these compliances were not in place, right? So I believe compliance are needed to just make sure that your business processes smoothen further, rather than defending, saying, hey, we're just meeting the regulatory requirements.
I actually have a joke on when you said gray area, because there was a time when I may have joined the fintech industry in 2011 or so, where if it wasn't in the regulation means you can do it. Now gray means if it's not in the regulation means you cannot do it. So, that is a joke within our industry, that the gray is not that gray anymore.
And when you participate with regulators, you always feel what perception you have, your org has with the regulator. So you don't want to show that it's just for sake of that. They know that, this is an organization or this is the team which understand the regulations, is helping not you, but the system. When you say surveillance, it's not about your org, it's about your system, where a wrong person is there in the system. Where are they helping us? There, when you feel, if I contribute to the system, they will contribute to our cause. That's something which is a new breed of people think about. It's not only about cost.
In my 2 cents, your question was, why do we need fear to comply? Correct? Human behavior at a traffic junction with a traffic light, as opposed to the same behavior with a cop and a light, and a camera and a cop. Very different.
Just wanted to add one point there, but at the same time, it is about making sure that everything happens in a very seamless manner as well, right, for your customer and merchant. So it's also about working with the regulator again to pinpoint the areas that may not be the greatest experience and seeing how we can innovate in those areas. And that's where companies like yours come in place.
Yeah, I'm very happy to announce in this panel discussion that we are having a product of that sort, which can help you in digital onboarding very easily. So please do come meet me, and we can, schedule a demo for you. And tomorrow we are having a webinar also for RBI guidelines. So I take this opportunity to announce.
I think
Thank
we are done on the clock. Any last question anybody would like to ask?
Hi, my name is Vishal. I am from Spice Root Legal. We are a law firm that advises in the fintech space. It was really great to hear from all of you and to get your insights. Since we were just talking about gray areas, I had this thought in my mind that isn't if the law is silent on something, whether or not we can do it. For example, when we see loading of PPIs with credit lines, something that used to happen up until the time that the RBI said, this cannot happen anymore. Like operating in the gray area, isn't that where the innovation really lies?
So I'd said about somewhere that the commodity versus innovation. The moment the licensing comes, it becomes a commodity business because you have to do the point you made about black and white compliance.
It's never black and white,
Right.
but that's what the joke we were making is now things are becoming more black and white. So those gray areas are becoming limited. So the amount we used to, like you rightly said, innovate at one point in time, looking at those gray areas, we need to tactfully acknowledge what is gray and what is not, and at the same time, be very clear and have clear conversations with the regulator on is this gray or not. It's not like the earlier 2011 to 2015 industry where we all wanted to stay outside the regulations. That's not possible anymore. So when you talk about gray areas, yes, they are becoming more and more limited now. So I would suggest, and my recommendation would be, have an idea which may be out of the box, but do pass it by the regulator before you implement it.
No, and just to add, what I have experienced is that a lot of innovation in the past has happened in that gray area and will continue to happen in that gray area. Okay, while, so what will happen is in this gray area is where you will pilot. Okay, and when you pilot, you will realize that, either somebody who will say this is something which you are not supposed to do, but you would not have onboarded millions of customers. You would have onboarded, let's say, 1,000, either through a regulatory sandbox or without regulatory sandbox, but with a clear intention saying I will only do pilot till the time, I will showcase this as a solution and then take it. But yes, in that gray area, people will continue to play, and that's where
You
the
see
maximum
the difference
innovation
between a
will happen.
regulated entity and an unregulated entity talking here.
I think the short answer is yes. Right?
Yeah.
And just
You can
yeah.
complete.
Short answer is yes, and I think in the longer, if I have to detail it further, yes, innovation do happen in the gray area, but whoever is innovating in the gray area need to be mindful that there must be some regulation in the proximity addressing your need, right? If you are if you are making your innovation in the spirit of those guidelines, the chances are you'll definitely make your gray area to a whiter side. Otherwise, you'll be the bad guy I mentioned about some time ago.
And Dipesh, my closing comment would be, even if things are black and white, Jurassic Park, when they had same gender dinosaurs and they started discovering eggs, and life always finds a way. So, regulators and industry it's like a referee role, so to speak. Let the game go on and have a referee who ensures fair play. With that, thank you so much.
Thank you.
Thank you so much.
Thank you so much.